Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting for this week, 14th to 18th of April, the Asian Session Live Market Analysis explaining the derived forecast for this week and also the levels in which the currencies might be making the moves in this week. Besides, I'll also do the market reading for today and try to explain to you what had happened last week and also in what way they are expected to take up the market. So first of all, let me give the derived forecast for this week, 14th to 18th of April. So this is the third week of the month. So volatile moves with a downward bias may be seen, and the players are willing to build more and more of sell positions at the higher levels before making a drop. That is why they try to gain the levels, holding high, gain the levels and induce short covering, afterwards open low, and then induce the traders to sell, then afterwards gain the levels and induce them to do the short covering. This sort of moves, they do it when they wanted to build more of a sell positions at a higher level. So that is what happening at the moment in the market. So they are not going to let loose the market in a big drop way. Instead, they will be just making a small drop and then gain again into induce the short sellers to do the short covering and again open low and make a nominal downward move and then move up. So it will be more of a higher level consolidation in this particular time frame. So what could be the expected market moves in this week? Swing and firm up could be seen during that of the Japanese session and then a small drop and then firm up during that of the European session. Then swing and slide could be seen during the US session as a week beginning false move. And then subsequently, they are expected to firm up tomorrow and make some rise during day after tomorrow during the European session. Then induce the traders to go in for a short covering and also they induce the traders to go in for a long positions and then later on they are expected to make the drop. And they are not going to make the big drop and they are making only a consolidation. So make a nominal drop of about 150 to 200 pips and then gain the levels again on Thursday and Friday. So you'll come across more of a volatile moves in this particular week. So it is ideal to do only swing trades, either way swing trades. So when they quickly gain the level, stop cutting the new high, you can take a sell. And when they drop or open low and then make a drop, you can cover the short. And again, take a buy. And when they go up, you can book profit on the buy side. So that sort of wide range swings we could come across. And the next week, they are 21st to 25th of April. And there could be more downward bias could be seen. And they could make swing and slide moves predominantly. And in between, they could gain the levels again in order to induce the short coverage, before making a big drop in the market. So I was envisaging a big drop during the month of April, but they are still holding it. That means they are not finished building the sell positions at the higher levels. And afterwards, if this is the scenario, if they are taking more time to take sell positions in the month of April, then again they will try to do it in the month of May also. And then they will try to drop and make a lower level consolidation. And then from that of June, they could make big rise above that of the current range. So they are making only wide range swings in the market. And if you look into the levels, all the time they have been doing a consolidation near the high and making a nominal downward move, but still they are not made any big drop. See why they have to make a big drop? Because only when they make a big drop, those who are holding long positions at the higher levels will come for a distress liquidation of the long positions. But it shows very clearly that the traders are not taking the buy positions and they are only taking sell positions. So the players gain about 100 to 200 pips, induce them to do the short covering and again come down a little bit. So when they do this sort of higher level consolidation, the traders will find that, okay, market is not going to fall freely. So it is better to take buy positions during dip. So once they take predominantly the buy positions during the dip and the drop, then they will make further drop in the market, inducing the long liquidation at the lower level. The advantage of inducing long liquidation is drop can happen in a few hours to few days, and it can be a big drop when they withdraw the support for about 200, 300 pips. Just like the tailspin, they can continue to make the drop, but gaining, they have to forcibly buy. So they have to forcibly accumulate. For that, they have to introduce margin. Only then they will be able to accumulate. So gaining the levels will take a longer time, and building the sell positions. Afterwards, they will let loose the market. And in a matter of about 1 or 2 weeks, the market will just drop about 500 to 700 pips. Then later on, they will accumulate the buy positions at the lower level when everybody is bearish in the market. Then they continue to gain the levels. So now still it is in the process of higher level consolidation. And in this, they could again go to that 1.3925 level. So far, they have shown the high as 1.3861 and come down. Then in the case of GBP again, they can revisit 1.68 area. So far, the high is 1.6744 and they could make further drop from there. Then in the case of yen, they are doing the lower level consolidation around 101 and slowly they could gain the levels to that of 102, 103 areas. And in the case of CH, they went up to 89 and again they come down and currently trading around 87, 87.50 area, and they are expected to slowly gain the levels. And the case of Canadian dollar, they came down to 1.08 last week, and then they gained the level to 1.0993. Now, then they may briefly come to that of 1.1025 and again make a drop to that of 1.08 area. They will make a wide range lower level consolidation with a brief downward stop and here and there if needed. If predominant of the traders take long positions there, then they could make further drop. And after the drop to 1.08, I think technically a lot of traders have gone short for a downward breakout. But the players gained the levels and induced them to do the short covering. Because when it was holding around 1.10 and 1.1050, a lot of traders have taken the buy positions thinking that it is not going to come below that of 1.10. But after coming to that of 1.09, then they become jittery and they just liquidated the long positions when they showed 1.0850 and then turned short. So they turned the sellers. So the players have bought all the selling and then gained the levels now, inducing them to do the short covering. Because last week, you know that everybody was talking about USD weakening move. So people thought that USD CAD will go in for further USD weakening. That is, USD CAD could go down in a big way, but they gained the levels. So this is what they create the sentiment and act against it of the traders. We need to understand. And we need to have a larger perspective of the market in order to understand how each currency they make moves in a different way. That we call it as the behavior of the currency. Currency is inanimate and it does not have the life and it cannot move on its own. Somebody has to move it up or down. And the group of people, they move it up or down. They are all players. You know, they know how exactly the traders are taking positions. And they allow the traders to take positions by creating the market sentiment. And once the traders heavily commit the positions, then the players make the opposite move of the market expectations and say that this is the attribute and things like that. On Friday, you know that the euro was going up in a big way and they took it up to 1.39, even though they just made the drop in the case of GBP, and from there, they have been doing the lower level consolidation with 1.67 area, and they are expected to revisit again 1.68. That they have done it in order to gain levels in the case of Euro GBP cross. And, you know, afterwards, Sunday, they said that oral intervention from ECB, and then they made about 50% drop. And again, they started gaining the levels. So if you think that that is going to act permanently, the oral intervention or any of the data which is released and its impact, then you might be disappointed. They're all short-lived. The news are all short-lived, and the news will be overcome by another news or the events. So that is how they simply discount the news, and in anticipation of the new move or new data, they try to make the moves. And when the data is out, then immediately they make a different move. So that is why people used to say that buy on rumor and sell all the real data. And so invariably, whatever be the saying in the market, ultimately we need to understand the players create the sentiment, act against it of the traders. And so they ask everybody to follow the technique. The trend is our friend, but they simply bring in trend reversals and say that, oh, it is unfortunate. It's because of fundamentals, the market is reversed, or it's because of technicals, the market is reversed. So that is how they'll give the interpretations with regard to market, and which we call it as a market comments. So ultimately, what we need to understand here is how the traders are committing positions. So only from there we will be able to derive how the players are going to make the moves in the market. So each and every currency, we need to understand how the traders are committing positions. So when you think that it is better to go in for a group of traders and all of them try to take the same positions at the same time, then what will happen? The players will act against. So that we need to keep it in mind. Now we'll come to that of the market reading. So Euro has got a low of 1.3842, 1.3861 is a high. They are not breached the low of the high. They are holding at the middle level. And in the case of GBP, 1.6720 is the low, 1.6744 is the high. So you find the narrow range 20-25 pips spread is seen in Euro and GBP, and they are holding in the middle level, and they wanted to slowly induce the traders to do the selling, thinking that it may not gain. Then afterwards, they wanted to gain during the European and US sessions. And in the case of USD yen, 101.42 is the low, 101.65 is the high, and they breached the initial high and went up to 101.66 and come below. So they could make one more attempt on the downside, as they had done the upside stop and they could try one more downward stop and increase the spread between the low and the high. Again, here you come across about 23 pips. So they will try to increase the spread, come down to 101.37 or 35, and then start going up in there. So USD-CHF 87.66 is the low, 87.78 is a high. So you don't come across much of a move in this. It's more of a consolidation. Then in the case of Canadian dollar, 1.0970 is the low, 1.0993 is the high. They are not breached the low or the high. Then Australian dollar, 93.76, 94.10 are the low and the high. They are not breached it. So in one of the currencies, excepting USD yen, they are not breached the low or the high. USD yen, they breached the high by 1 pip. That's all. Now, looking into the market, now you find the net change in the case of Euro and Aussie are negative, but GBP is positive. So it's a contrarian move. Then USDN is positive and GBP is positive. So it's a contrarian move. GBP is positive and USD-CHF is positive. It is a contrarian move. And again, GBP with that of CAD is a contrarian move. So you find here that they are doing the contrarian move in order to handle the crosses during the mid-session. So the crosses, what they are trying to do, primarily with regard to GBP. So GBP crosses are handled now, and later on they will come to the commodity crosses. Then they will try to make some contrarian moves in that of the commodities. Nowadays, you would have noticed during most of the time, they will try to show positive net change in the case of Canadian dollar and Australian dollar. And sometimes they show negative net change in both. So we need to understand which way the market is going to move. And they are not going to make a clear move of USD gaining or USD weakening. Instead, they are going to focus more on the contrarian moves. So we need to find out each currency, how they are going to behave, and accordingly take decisions. Ultimately, what is more important is reading the type of moves they are doing it in each and every currency, not a general market, reading the type of moves in. See, now they have done the stop and in the case of USD yen, but whereas upward stop in the case of USD yen, whereas in others they have not done it. So we have to isolate the currencies and find out where they have done such moves and then try to understand. So if you're a scalper or you are just going for a swing trade, you can take a sell in the case of USD yen, and when they make a drop below that of 101.42, you can just grab it and turn long. And once they stop cutting the new low for more than 30 minutes. So that way you can just watch the market, and depending upon the type of moves, you can take positions. So many of the traders have got the tendency that, so they are making the USD gaining or the USD weakening move. So if it is USD weakening move, they, okay, come on, take buy position in all currencies. Don't do that, because they are primarily focusing on the euro and GBP in order to make the high level sells, and also they want to sell as much as possible in the case of euro GBP cross, which is got the high value. Highest value is seen with regard to the cross euro GBP, so they wanted to build more sell positions in the case of euro GBP by keeping high euro and dropping GBP. So they are expected to gain again to that from 84 to 83, 82, they come down. And again, they are expected to gain to 84 area, build more sell positions in the case of euro GBP, and later on let loose euro GBP in a big way by gaining quickly the levels in the case of GBP, dropping euro, telling some story. So understand these stories are all short-lived, and don't think that it will have permanent impact with regard to the currencies. So as they change the scenario in the market from time to time, we should also be quick-witted, and we should be in a position to grab the change in the market sentiment and quickly act on it. And always keep in mind the false moves or the quick moves in the market. And during such quick moves, we can take positions, and that way we will be able to really make good profit rather than simply taking the position and waiting for the market to move in our favor. So wait for the data release time or wait for the early and the late sessions. If there is a quick drop and when they stop cutting the new low for more than 30 minutes, take a buy. You'll be able to see the quick rise afterwards in the end of the session or the start of the new session and book profit. When they stop cutting the new high for more than 30 minutes, take a sell position, and then they will make a drop and you try to book profit. So that way you try to do either way trading. Wait only for the quick moves and commit positions, because the players want the traders to commit positions and wait and lose their patience by holding the market. So you have to outsmart the players by not committing the positions during consolidation. So especially when they do a narrow range consolidation, which is about 100 to 150 pips in a week, the best is wait for such quick moves to take positions. Otherwise, don't commit. It's actually a waste of time by simply committing position and expecting the market to make even 5-10 pips move that they may not do it, because their main objective is to test the patience of the traders. And then when they are not rising, the traders will go in for a sell. Then afterwards, they rise and induce them to do the short covering. So understand their intentions and trade wisely according to their intentions. So as far as trading is concerned, and since they are doing the high level consolidation, the ideal type of trade will be swing trades. So do the swing trades whenever the spread becomes more than 40 pips between the low and the high, and whenever they make a quick downward move and stop cutting the new low for 30 minutes, take a buy position either in the major or in the cross. Then afterwards, when they quickly gain the levels by end of the session, you try to keep stop at entry and try to book profit. Don't aim for a bigger profit. Don't aim for the market to go up to that of the resistance and things like that. You have to ask one simple question. So, okay, I am really expecting the market to go up to that of the support or up to that of the resistance. But how can it go on its own? Somebody has to take it. And if all the traders are selling at the market, it doesn't mean that the market has to drop it. And only in the bank deal rooms, they'll be able to do a higher level buy or a lower level sell and move the market either on the upside or on the downside with a big volume at a single time. So keep in mind that it is not the traders who are making the moves, it is the players. And using the bank terminal, they make such moves. So when they are making such quick moves, they only induce the traders to develop panicness, nothing more than that. All quick moves are to induce the traders to develop panicness. See, if it is the end of the world and everybody is being washed out into the ocean and things like that, then there is a need for this sort of crisis. But nothing happened in the world. But they use the media, they use all the websites and try to just make about 50 pips drop or 100 pips drop and just create the hype. And immediately the people are moved, and those who watch online, the market using the online trading terminal and also other webcasts and things like that, they develop the fear. So they're using the medium of the internet for creating the fear and also the television. So understand that nothing has happened to the world and they are all only the changes. Nothing dramatic has happened to any of the countries. So in such a scenario, they only induce the traders to get a magnified picture of that country and develop a wrong notion about it. And when they change it, we find it extremely difficult to become bullish to bearish, bearish to bullish, when there is a bearish talk about US dollar, and suddenly when they drop euro and GBP, we are not able to digest it. Because we are involved with such interpretations. These interpretations are nothing but the false interpretation. They just use it as an excuse in order to create the market sentiment. So keep aside all those things and you just to see whether the players are going to make that drop in the market or rise in the market, identifying the type of moves so that you will not become afraid of taking a sell position once they form the new high and stop cutting the new high for more than 30 minutes to 2 hours. Similarly, once they form the new low and stop cutting the new low for more than 30 minutes to 2 hours, you will be willing to buy. And if you are under the influence of fear or the greed, then you don't buy when it is available cheap and you don't exit when it is a prime, when it has reached the peak and you are supposed to exit and grab the profit out of greed, you fail to exit because you have an imagination that you will go to heaven and you can become a billionaire overnight, and later on see that you are struck with a bad position and tell everybody that I wanted to just somehow book profit, but suddenly, some distraction came, so I waited. We all give excuses. Those excuses are mainly to just to give a satisfaction for your ego. Ultimately, you have to get rid of that and you have to see that, okay, when the profit is seen, we should be in a position to grab it, at least to protect the minimal profit by using a trailing stop. So this sort of strategy is vital in order to earn money from the other market. So you take the sell or the buy during such quick moves as a spike trader, and then once the position makes profit of 25 pips, keep stop at entry and trail the stop manually, if not automatic, because when you automatically trail, the platforms come to know about it, they just grab the trailing stop and hit it. If you manually do it, they will not be able to do it. Keep it about 25 to 30 pips away from the market and try to maximize the profit when they are making the move in your favor. So that even if you miss out of greed, the position is expected to be closed by the trailing stop. So that consistently you will be in a position to earn. Always try to wait for such quick moves in the market and try to take the positions. Otherwise, you simply watch the market so that if you have got any other urgent work to take care, you'll be able to do it. Otherwise, you will get struck with the position and you will be simply wasting your time. and the players are not going to make big moves in the market all three sessions of the day. So they are primarily focusing on the data release time nowadays because of the volume has come down, and they want the traders to commit positions based on the interpretations given for the data release. So they simply make the consolidation and make moves of 20 pips, 30 pips, and just hold it in the middle level all the time. When the data release comes, then they will try to act. Then afterwards, next data release, if there is adequate positions taken by the trader, they make the opposite move. Otherwise, they simply hold with a nominal swing. So Monday, Tuesday, and Wednesday, they just make nominal swings and see that the traders commit positions. And later on, depending upon the positions committed by the traders, they try to make the moves. Last week, they had done it like that. Monday and Tuesday, they just kept Euro and GBP weak. And everybody thought that it could make for the drop. And suddenly they made the rise once the traders commit their positions. So they test the patience of the traders. And if the traders lose patience and see that, okay, there is not going to be any spike, so better let us take some sell positions. The peak we have missed, so let us take some sell positions. That is how they take the positions. And afterwards, the players make all the gains and show the peak, which is higher than that of the earlier peak shown in this week. This sort of clever games, they are trying to do it. And afterwards, now they are making a drop and say that, no, the Europe is not interested in the currencies to gain. So all excuses, they give such timely excuses, and they have got the money power to make everybody to talk in their favor and make such moves. So don't be moved with that, and try to understand their intentions and try to trade smartly. We have to outsmart such players, only then we will be able to earn from the other market. So always they handle two pairs at a given time and try to see that what are the pairs they are handling at a given time, and then try to take positions. We'll be able to grab quickly profit, and always aim to do the spike trades during this particular time frame. So tomorrow I'll be coming again, and I will give tracking the forex market together. Part 1 between 9 and 9:45 GMT, and part 2 between 14 and 14:45 GMT. So I'll be explaining to you the type of moves they are making in the market, and also how exactly we'll be able to identify the type of moves and try to take the positions accordingly. And the webinar is going to be for about 45 minutes. So I'll try to give you what is happening in the market as a live market reading, and then commit positions during early session. And that of the early US session, I would have closed the position by end of European session and show the results during the part 2 of the webinar. Then I will also commit positions for that particular session, US session, and show you how exactly session-wise trades, swing trades can be done by reading the intentions of the players. Then Thursday, I got some other work, so I'll not be able to come. Then I'll come back on 21st April, the next Monday, and give you the forecast for the following week, 21st to 25th of April. So if you've got any doubts, you can ask me, and questions are there. I'll be willing to answer to those questions. The judge, why Euro and GBP is taking so long to drop? That is what I explained, that the players wanted to build huge sell positions at the higher levels, and the traders are not buying it. So when the traders are not buying it, and they will make such a drop, about 50 to 60 pips. And if the traders sell thinking that it is going to drop, and later on gain the levels and induce them to do the short covering at the higher level. That is what they had done it last week. So this week also they could do it similarly. And they wanted to build huge sell positions at the higher levels before making a big drop in the market. But we cannot wait for such a big drop to happen immediately. So the best thing is focus on the data release time. During that time, they are bringing the quick moves in the market. And when they always make a false move before the data release. So when they make a dip, then I understand they wanted to spike up after the data. Then take a buy exactly 1 minute or 1 second before the data release or 5 seconds before the data release to take the position and then book profit when they spike up after the data release. Don't wait for a long time because again they may come back and try to consolidate for the next data to be released and then again make an upward spike. So instead, wait for such quick moves in the market and commit positions and book profit. And that way you will be able to survive during this particular time frame. In charge. When dollar is really recovered in the long future. See, the dollar recovery could happen during the of the month of June in a big way. This time, they are expected to make the consolidation and the drop nominally. And afterwards, the quick drop is expected to happen. And how they have done it in the case of Canadian dollar, you know that at 1.12, they have been consolidating for a prolonged period and started making a drop. So that means what? 1.12, they have built huge sell positions, and now they are just holding up to that 1.08 to 1.09 or 10 and trying to buy, accumulate against their sells. So there is a scenario they do it. So here again, in the case of Euro and GBP, they are trying to build sell positions, and they use from time to time different stories. Ultimately, their intention is very important. So once we see that they are not showing the trending move during the second week, then that means they have got some other program in their mind. So what is that program? They are struck with that of the market because they wanted to build sell positions at a higher level, which they are not in a position to do it. So they are taking longer time to build sell positions at a higher level. Then, where do you see gold this year? Gold is expected to make the lower level consolidation. After the month of June, you will come across, it will go to 1,400, 1,500, 600. Then Chalkit. What about Aussie? Aussie is again doing a similar high level consolidation of 0.94. And afterwards, it is expected to make the drop. So till such time, do only the swing trade. The best thing is Aussie, if they let loose and they simply let loose without giving a support, because it is not a high volume currency similar to that of Euro and GBP. So avoid doing buy and sell trade in the case of Aussie, but you can do sell and buy trade. Sell only when they are making a quick rise, either of the high or above the high, but not otherwise. Then when they quickly drop and stop cutting the new low, you book profit. That way you try to do it. And if you hold a position and wait for the market to move, it will be really testing your patience. I cannot help it because the players wanted to build positions at the high level. So ultimately, they are the king in the market. So we have to dance according to their tunes. Then INI. Could you please explain what you mean that Euro GBP has a higher pip value? See, the pip value in the case of Euro GBP is high. See, for example, in the case, if you go into that of the pip value, 1 pip, how much it is. So if you see it in CHF, it might be 0.8, or yen, it might be 0.758, like that. And Euro has got a pip value, 1 pip is $1. And GBP, 1 pip is $1.1. Like that, they have variations. And some platform, they don't discriminate and simply give it as a leverage. But actually, in the market, the pip variation is there. And in the case of Euro GBP, 1 pip is $2. That is the highest pip value. Any other question, please? No more questions. So let me. Okay, stock markets are expected to make this slide. As I explained this week, they will do high level consolidation and then try to make the slide in this year. And if you are holding long-term stocks, you try to book profit and then wait for the market to correct in a big way, and later on you can re-enter at the lower level when they are available at cheap. And you might see that people talk about bullish conditions of the market, etc. And you know that they talk bullish in the stock market and distribute the stocks. And the small investors think that they can make about 10 to 15% profit on those stocks and buy it at a higher level. And when they drop, they don't have any other option than to liquidate. If they are taken the leverage position in the derivative market, especially the futures or the options market, they are forced to liquidate. In the stock market, only advantages you have is you can take delivery-based trading. In such a situation, you'll find the delivery will be showing the notional loss, but still, if you hold it for a long time, you will be able to exit at par or with a profit. But always keep in mind, even the delivery-based trading, whenever the market is undergoing the tailspin downward move, you try to pick up some good value stocks and high-performing stock, consistently dividend-paying stocks, and later on book profit. And people might say that dark horses, etc., this stock might be making about 100, 200% rise and things like that. They may show so many examples, but don't listen to all those things. The stock market players, what they do is they have a tie-up with it of the promoters of such companies, the small companies, and they rig it to an unimaginable level, even though they are not even got the break even and they are not made any big profit. And still they will say that they have got so much of orders and they have got the potential and they can, and especially with regard to software and the biotech companies, they have been doing it and in a big way. And when all willing to buy, because that is the one which is making a phenomenal profit when rest of the stock market is sleeping, then everybody will bet the money there, and later on you will find those stocks undergo a big drop and never come up. And later on they become penny stocks. So that is how many traders, if you ask them, even those who do the delivery-based trading, if you ask them how many such penny stocks we have, they will show so many. They might be having a list. So market is here to cheat. So we have to prevent being cheated, nothing more than that. Okay, these are the expected market moves for this week and the expected range in which the currencies could trade. And market is making subdued moves now, not breaching the high or the low. Wait for such quick moves to happen above that of the high or below that of the low, and then try to commit positions so that you will be able to quickly profit. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar, and thank you all for your presence here and you are listening to this, and try to use your common sense and try to see that what I'm telling, whether there is a truth in it or I am just imagining myself. Because, see, you should not blindly take up any concept or any of the information. I have gathered the information from various sources and passing it on to you, but still, you try to test it and try to see that there is truth in it, and later on, you accept it and become a smart trader rather than becoming yet another trader in the herd of traders. See you tomorrow during Tracking the Forex Market Together webinar. Wish you all the best in your trading. See you.